to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So good morning, class, and welcome to another session on valuation concept and methodologies. So today we'll discuss about market approach valuation. So market value approach is a valuation method used to determine the appraisal value of a business, intangible asset, business ownership interest, or security by considering the market prices of comparable assets or businesses that have been sold recently or those that are still available. So class, no? So siguro ang important or key important words here to denote market value is comparability, no? So meaning you have to make sure that in order to have a reasonable market value, you have to compare it within the same industry, no? So for example, you're looking into parang before, no? There have been talks between GMA7 and TB5, no? Parang ang at that time Manny Panghilinan was looking into buying, no, GMA7, pero I think well hindi nagmaterialize, pero ganun, well, one of the uh, possible approach that they've underwent at that time is to look into the market value, no? So magkano ba talaga yung valuation ng GMA, no? Of course, they can compare it within the same industry, no? So it could be versus ABS-CBN, TB5, no? Uh, Again, the comparison should be made within the same industry, no? And not necessarily again within the same industry. You also have to look at the size, no? So it should be within the same industry and comparable also in size, no? So under market value approach, we're going to look into price earnings ratio, uh, also the sales and book value, no? So later on I have prepared different discussion problems to illustrate these items to you, no? Okay, so well, in basically class, in this chart, no, so it's just shows us the difference, no, differences between a cost approach, discounted cash flow approach, and market approach, no? So under market approach, ayan, nakalagay public company comparables, no? So when we say public company, these are the companies listed, no, in the Philippine Stock Exchange, no, in our case, and also precedent transactions, no, precedent transactions, no? So meaning we have to look into past transactions of these companies in order to put a value for a business or asset. Okay, so market approach methods, sabi natin, no, public company comparable. So it entails using valuation metrics from companies that have been traded publicly, which are considered to be rightly similar to the subject entity. In most situations, direct comparability is hard to attain since a majority of public companies are not only larger, but also more dissimilar to the subject, no? So, good example niyan is yung uh, in terms of yung fortune, no, before those yung Mighty, no? So it's a Filipino company, and of course, no, if we are going to put a value to fortune or Mighty, ano ba yung mga pool na pwede natin tignan? Syempre, we have to look into the same industry, no? So tobacco industry. But then under the tobacco industry, yung mga players dyan are multinational companies. So while we might be able to look into the data presented, baka lang hindi comparable in terms of size, no? Kasi nga imagine, no, you're comparing a Filipino company versus multinational companies like yung manufacturer ng Marlboro or Winston, no? 'Di ba? You have Philip Morris, no? So just to name a few. So precedent transactions, no? So involves deriving value using pricing multiples that are based on observed transactions of companies in the industry of the subject company. It is based on the perception that comprehensive company financial data is not easily available, but there is unavailability of transaction value. Siguro one good example of this is in terms of sa ano naman tayo, mga pharmaceutical companies, no? So in terms of pharmaceutical companies, they have um, a so-called database, no? Basically a database that will that's um, capturing all the sales transactions of basically all the pharmaceutical companies in the Philippines. No? So we call it, if I'm not mistaken, EMS. No? So well, uh, so basically, it's being looked into just to have an assessment, no, of total market share, no, in terms of pharmaceutical companies, no. So there obviously you can see the different brands, no, how they're performing in the market. So we can look into those data, and then from there we can put a value to a certain business, no, or organization participating in that database, no? So just to say, okay, so in both market valuation methods that we've discussed earlier, no, so yung comparability and as well as precedent transactions, so we have to look into ito. Palagi naman natin sinasabi kanina pa na they must be operating the same industry. They are similar in size, offer identical services or products, whether any of the companies are operating in multiple industries. No? So, for example, well, good example is San Miguel Corporation. So, as you know, San Miguel is uh, operating in food industry as well as in oil industry. No? So they own Petron. So the location of the companies, of course. Kaya nga kanina, 'di ba, pinag-uusapan natin yung companies, no, playing within the tobacco industry, no. So there might be a difficulty in terms of valuation kasi nga if we're going to look into a Filipino company against a multinational company, so baka hindi comparable, no. Whether they are in competition for the same business, of course, and whether they have similar profits. So again, um, uh, obviously for publicly listed companies, no, so data can, well, just a click, no, so you can um, download the financial statements. It's published kasi in SEC, no, Securities Exchange and Exchange Commission. So if you have access to it, you can actually go to SEC and then request for the financial statements of publicly listed companies. So of course for a fee, no. So but then what I'm trying to say is data are available, no. So yeah, that's why back when I was preparing my strategic management paper, no, so I used Pfizer at that time as my company, no. So what I did is I went to the SEC. Actually, at that time meron ako access no sa website nila, no, kasi I was still working in Pfizer at that time. So just for a few clicks, no, so makukuha ko ng financial statements ni na GlaxoSmith, Unilab, sino pa ba yung mga ginamit kong competitor dati, and J&J, no? Yeah, I think yun yung major players, no, within the Philippine market in terms of pharmaceutical companies. So then, we'll let's try to look at the different, say, indicators, no, in terms of market valuation, no, or market approach. So we have price earnings ratio. Ito naman, this is not a new concept to you, no. So we've discussed this a number of times. In fact, we've looked into the price earnings ratio in your financial management class, and also in financial accounting and reporting. So like I said, this is not a new topic to you. So price earnings ratio is the ratio for valuing a company that measures its current share price relative to its earnings per share. No? So the price earning ratio is also sometimes known as the price multiple or the earnings multiple. So this is being used by investors and analysts to determine the relative value of company shares in an apples to apples comparison. No? So palagi natin sinasabi niyan, under the market approach valuation, industries, I mean, companies must be playing within the same industry, no? so that price earning, and when we look at the price earnings ratio, then we can compare it, no? So that's why it's called apples to apples comparison. Of course, you would like to, kaya apple to apple, no? So you want to compare similar companies, no? So you don't want to compare, say for example, I'm looking at Globe, no? Let's compare it to Marlboro, no? It doesn't work like that. So the formula to uh, calculate the price earning ratio is market value per share over earnings per share, no? So basically, class, no, mini-measure nito is um, in terms of the market value of your stock, no? Magkano ba yung na-generate nitong earnings per share, no? So earnings per share, you know, ito naman yung uh, value of your stock compared to the income, no, that you earned for a given period. Now, to illustrate siguro yung price earnings ratio, let's have discussion problem number 1. Let me read the requirement first. No? So what is the price earning ratio of Piolo Company? Piolo Company, a publicly listed company, reported earnings for the year amounting to 25 million pesos with outstanding shares of 1 million. The market value per share of Piolo Company is 122 pesos. No? So let's have problem number 1. Okay, so problem number 1, class, ang hiningi sa atin is price earnings ratio. Ayan, nilagay ko na yung formula natin. Sabi dyan, it's market value per share over the earnings per share. Of course, no? Earnings per share, paano ba natin kinocompute yan? It's the earnings. Oops. How much is the earnings? So ayan, 25 million over the outstanding shares. So, oops, mali tong dapat to. Outstanding shares. Okay, so outstanding shares natin is 1 million. So that's 25 million over 1 million. So we have earnings per share of 25 pesos. So now we have determined the earnings per share. We can now calculate the price earnings ratio. So again, the formula to calculate the price earnings ratio is market value per share. That's 122. That's given over the EPS. So EPS is 25, no? So we have calculated that earlier. So that would be 4.88, no? So meaning, anong sinasabi nito? The market value of Piolo Company's share is 122. So divided by the EPS, no? So the EPS of 25. So meron tayong 4.88, no? That's our price earnings ratio. So that's problem number 1. Oops. So let's now go to the another item, no, under the market approach. So we have book to market ratio. So book to market ratio is one indicator of a company's value. The ratio compares a firm's book value to its market value. A company's book value is calculated by looking at the company's historical cost or accounting value. A firm's market value is determined by its share price in the stock market and the number of shares it has outstanding, which is its market capitalization. No? So I think this is also self-explanatory. No? So when we say book to market, basically we're just looking into the ratio, no, between how much is actually your valuation per book compared to the market price. No? So it's common shareholders equity over the market capitalization. Remember, class, no? To calculate your market capitalization, it's just basically the market price, no, multiplied by the shares outstanding. No? So to illustrate that, before we go to the discussion problem number 2, no? So let's have another look on the book to market ratio. No? So what does the book to market ratio tell you? So if the market value of company is trading higher than its book value per share, it is considered to be overvalued. If the book value is higher than the market value, unless consider the company to be undervalued. No? Parang ano rin siya klase, no? So well, self-explanatory. Tsaka parang yun naman talaga yung sinasabi ng statement, eh, no? So, imagine, we're just comparing our book value, meaning how much is how much is reported in our balance sheet compared to the market valuation. No? So the book to market ratio is used to compare a company's net asset value to its current or market value. No? So again, the formula to compute your book to market is common shareholders equity over the market capitalization. Okay, so to illustrate that, let's have problem number 2. So well, basically we're being asked to compute for the book to market ratio of Piolo Company. So Piolo Company, a publicly listed company, reported on its statement of financial position total assets of 85 million. The company maintains its debt ratio of 70% and have outstanding capital stock of 1 million. Given their performance and financial stability, their stocks were traded at 30 pesos per share. No? So pag-usapan muna natin yung bits and pieces of information within the problem. No? So it's mentioned here about the debt ratio. Debt ratio is 70%. So therefore, ang complementary ratio of debt ratio is your equity ratio. No? So if your debt ratio is 70%, ergo your equity ratio is equivalent to 30%. So let's have problem number 2. Okay, so problem number 2, again, we're going to calculate for the book to market. No? So common shareholders equity over the market capitalization. How much is our total assets given? It's 85 million. Well, the reason why we've computed for the we look into the total assets is of course to compute no how much would be our debt and equity. Kasi nga, pansinin nyo, the only available data provided in the problem is the debt ratio, which is equivalent to 70%. Kaya you will always need to go back to your accounting equation, no? Class, very important yan. Huwag kakalimutan yung basic accounting. So it's asset is equals to liabilities plus equity. Again, na-establish na natin how much is your total assets. Of course, sabi natin, total assets is equivalent to your debt plus equity. No? So, sabi ng problem, debt ratio is 70%. So, 85 million multiplied by 70%. Total debt would be 59,500,000. And again, pinag-usapan natin kanina, no? So the complementary ratio of debt ratio is your equity ratio, no? So equity ratio is 30% or that's equivalent to 25.5 million, no? So with that, pwede na natin computein yung book to market natin. So book to market natin, sabi it's equity over the market capitalization. O, sige, pag-usapan natin yung market capitalization. 'Di ba kanina, sabi natin it's just the market price multiplied by the outstanding shares, no? So how much is the outstanding shares? That's 1 million shares multiplied by the market price of 30. So therefore, 30 million, no? So available na sa atin yung parehas na data na kailangan natin. So numerator natin is the common shareholders equity of 25.5 million over 30 million, our market capitalization. So the book to market is 0.85. Okay, so that's problem number 2 on book to market. Okay, so another topic to gauge the market approach valuation is the dividend yield. So dividend yield is expressed as a percentage. It is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. So mature companies are most likely to pay dividends. Pag sinabi natin mature companies, ito yung mga companies that are already either stable or established throughout the years. Companies in the utility and consumer staple industries often having higher dividend yields. Bakit? Kasi nga, utility companies, consumer staple, ito yung mga food, no? So imagine, ito talaga yung mga necessity natin. So therefore, they always pay higher dividend, no? So how to compute ba the dividend yield, no? So it's annual dividends per share divided by the price per share. Okay. So, well, I think let's go to discussion problem number 3 to illustrate dividend yield ratio. So the requirement is, what is the dividend yield ratio of Piolo Company? Piolo Company declared dividends of 2 pesos per share for their performance last year. After the declaration of dividends, the market value per share increased to 45 pesos per share. Tandaan, balikan ko lang to class ha. Ang pinag-uusapan ditong price per share would be the market price. So annual dividends per share divide by the price per share. Tandaan, under the dividend yield ratio, pinag-uusapan natin dito would be the basically how much a company pays out in dividends relative to its market price. No? So parang kino-compare natin magkano ba yung binibigay ni company na dividend compared to the market price. No? Para kasing parang standpoint na lang na ikaw may plano kang bumili. Say for example, the market price is 100, no? So parang ano lang 'to, yung para lang hindi komplikado. May 100 pesos ka. Mag-i-invest ka. Siyempre i-check mo, magkano ba annually yung binabalik ni company out of my 100 pesos investment, no? Kailan ka magiging masaya? Out of 100 pesos, magkano yung binabalik yearly? No? So siguro ako kung 10%, aba sobrang happy na ako niyan. So imagine, no, for every 100 pesos, 10 pesos yung binabalik sa akin ni company as dividends. No? So imagine 10% a year, no? So that's really massive, no? So I'm just talking about 100 pesos, and what if I'm talking of 100 million, no? So para lang mas ma-appreciate yung concept ng dividend yield ratio. No? So going back to problem number 3, let's have problem number 3. So again, the formula, it's annual dividends per share. So that's 2, that's given. Divide by the price per share. The price per share is 45. No? So imagine you are investing 45, you're getting 2. So the dividend yield ratio is 4%. No? So for every year, company is paying, or companies, or say, yeah, paying you 4% out of your investment of 45 pesos, no? Which is really good. Yun, no? So, well, I suggest class, no? So every time you go through this type of problems, so yung mga ratios, especially mga financial ratios, no? So we don't want to indulge more on the calculation, but especially, no, when you are already in private practice, yung mga calculations na yan, they can be automatically calculated using Excel, no? But then the most important thing is you're able to analyze it, you're able to interpret these numbers, no? So that's more value adding activity, no, as professional accountant, kasi you don't want naman na ang gagawin palagi is I'll get the FS of Globe or and Smart, no? So ayan na, na-compute ko na, ito na yung price earnings ratio natin, ito yung dividend yield ratio. Pero but then what those numbers mean to you, no? So ganun palagi class, no? So like in my case, no, I always do away with manual calculations, no? I keep looking into improving my processes so that my time is really dedicated in more value adding activity, no? Kasi I'm sure you'll also feel the same, no, when you go to private practice. Alam mo yun, yung time na uubusin mo just to go through different manual transactions, no? So that's we can eliminate that by way of, sabihin na natin, macro, simple macro, or even formula using Excel, no? Or robotics, yan ang trend kasi ngayon, no? So imagine, no, sabi nila, it's a threat daw to the accounting profession, those robotics, no? Depende kasi how you take those changes, no? So but to me personally, I welcome those type of improvements, no, process improvements, robotics. Kasi imagine, no, previously kung ginagawa mo siya for 2 days, the robot can give you the same result in say 5 minutes or less. So alisin natin yung manual approach, then ang mangyari nun, I'll focus more on the interpretation of data, more on the analysis side. Of course, in the undergrad, it's very important to know how to calculate the numbers and as well as to interpret those numbers. No? So we're attacking or we're approaching this concept, no, by making sure that you understand it well, and as well as you're able to interpret those numbers. No? So okay, so let's have uh, EBITDA multiples. So what are they? Another key item in market approach valuation. So EBITDA is an acronym that stands for earnings before interest, tax, depreciation, and amortization. It is an indicator that is often used by investors or buyers to measure a business financial performance. This formula eliminates the non-operating effects unique to each business. So by focusing on profitability before depreciation and amortization, which might vary significantly across industries as the measure of business performance, EBITDA allows comparisons of companies across different industries and tax bracket. No? EBITDA multiple, as sinasabi dito class, is when we look at the EBITDA multiple, you can use this to compare even across different industries. No? So that's the beauty of EBITDA multiples. Now, how to calculate the EBITDA multiple? So it's market value per share over EBITDA per share. No? So the application of multiples to EBITDA values allows comparison of companies of varying size across various industries. Ano ba yung importance ng EBITDA? So imagine class, no? Depreciation. Kung halimbawa manufacturing firm ka, obviously, you have a lot of machineries and equipments in your books, no? And annually, you need to depreciate that. And that depreciation expense can be huge. So imagine deducting huge amount of depreciation in your income statement, and then comparing it with another company. Sabihin lang natin merchandising company. So very little lang ang depreciation expense niya. So hindi siya magiging comparable, no? So yun lang naman yung sinasabi ng EBITDA. So typically, industries with higher potential for future growth will have higher multiple values, and larger, more established companies will have higher multiples than smaller ones. I mean that's obvious, no? So the level of EBITDA itself will also play a role in assigning multiples. This variance allows potential risk versus return to be taken into consideration. So generally, large companies or those with higher profitability pose less risk. This will be reflected in EBITDA multiple used to calculate value. Okay, so let's have discussion problem number 4 to illustrate EBITDA. So what are the requirements? Number 1, how much is the EBITDA of Piolo for the period? Number 2, how much is the market value of Piolo? And then number 3, if the owner is willing to sell 50% of the ownership for 500 million, are you going to buy the company's stake? So let me read the problem. First, Piolo Company, a closed corporation and selling its shares to an investor. Statement of income of the company for the period ending December 31, 2021 is as follows. So you have your revenue, cost of sales, so net income is 225 million. Piolo Company depreciation is 50 million and is exempted from paying income tax. The industry where Piolo recognizes the EBITDA multiple of 2.75. Okay, so let's have problem number 4. O class ha, notice, given na yung EBITDA multiple. Given ng EBITDA multiple, ang hinahanap sa atin ngayon would be the market value. Sige, isa-isay natin class. So, number 1, requirement number 1, how much is the EBITDA? Of course, operating income of 300 million. So that's 300 million. We have to add back the 50 million kasi the depreciation here is already part of the operating expenses of 300 million. Given naman yung depreciation, it's 50 million. No? So that's 300 million less 50 add 50 million to get your EBITDA. Again, class, no? So in this case, only depreciation is given, no? So what if there's also the amortization? So you have to add it back. So 350 million, no? So that's the EBITDA. Now, how much is the market value? So remember, class, balikan lang natin yung EBITDA multiple, no? So kunin ko to para para may guide tayo. So how to get the EBITDA multiple? It's market value per share over EBITDA per share. And remember, no, meron tayong EBITDA. Na-compute natin yung EBITDA, that's 350 million, no? So multiply by the EBITDA multiple, that's 2.75. So the market value would be 962,500,000. No? Next is if the owner is willing to sell 50% of the ownership for 500 million, are you going to buy the company's stake? No? So remember, how much is the market value? Market value is 962,500. 50% of that is equivalent to 481,250,000. Ang tanong dito, are you willing to buy this for 500 million? Obviously, the answer is no. Kung ito lang yung data provided, walang other factors not considered, and the obvious answer is no. Kasi nga naman, imagine the market value, the market price is just 481 million, and yet it's being sold for 500 million. Lugi ka. No? So again, no, the decision was purely made based on this data alone. No? So walang other factors involved. Okay, so well, that ends our discussion on the market approach valuation. Again, if you have any questions, you can reach me through my personal email address. It's flash on your screen. It's markgibson.manawis@yahoo.com.ph. Now, if you have any other concerns, suggestions, and feedback, you can always course it through your class PDL, and then your class PDL can coordinate to me directly. So thank you very much. Stay healthy and stay safe. Goodbye.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!